Hey, what's going on, family? This is MC Fire coming at you again with a Monday video, checking out the December 23rd. So it looks like the so-called quote Santa rally has been canceled. We got 4 minutes on the market before market open. It doesn't look like we're going to get a rally into proverbial the end of the year. So no worries there. But you have some major indexes really kind of pulling back, showing signs for long-term buys. So like XLI, we'll get XLK pulled up here, right? XLRE, really juicy pullback there in real estate, kind of the laggard. XLU, XLV, definitely nice pullbacks there. So definitely plenty of buying opportunities in the ETFs here. We can take a look at XLY. Really nice pullback in the XLY. Not too aggressive, enough to kind of continue the trend in XLY. So just something to watch, right? Taiwan Semiconductors, or excuse me, TSM. Nice pullback there, rotationally. See if we are getting some. So as you can see here, looking actually extremely bullish for that guy. So the buy here could be valid if it kind of opens above market open or market close on Friday. Got a pullback in Tesla here, but it looks as though that pullback is going to be short-lived. We're already looking somewhat bullish from close of Tesla on Friday. Tesla closed at 421, and it looks like it's going to open at 430. So shout out to Tesla on that. If it can get up into the 430s, that's a good look for Tesla. Kind of want to see it get above 446 though, especially for the setup. But yeah, Tesla is in the stratosphere, so we want some more pullback there. Yeah, looking like a peekaboo. We want to see a break above the high here for a continuation play on SPG, Simon Property Group. Not looking too bad. SCHD, kind of same thing. Want to see the Fed candle kind of get washed to the upside, and we'll be here to kind of see that. Starbucks is getting absolutely hammered. Rough day for Starbucks already. RGTI, for those who are trading this this penny stock, essentially, we are looking at a major move to the upside to $12 from the close of around $9. So that's a good look there. Not looking too bad at all. Some parabolic move. Yeah, the penny stocks, they're hitting. There's AMD alert. Take a look there. So corn alert. We recently stopped out of corn, so we'll see what all the fuss of it's about. Need a little bit more juice on that AMD for it to go ahead and push. Look at corn, SKY, and Novo. So corn still kind of in play. Want to give a peekaboo in. Not too bad. ACN. Let's go look at ACN as well. Yeah, not really where we needed to be. Didn't make a nice move, but not where we needed to be, which is up there to break a high there. The new one, so to speak. The new setup. Okay, so we do actually like that. It's pretty good. Nice bullish setup. We'll see if we can get a pullback into the into VWAP. Looks like it's already pulling back. STZ is looking pretty good. We've got MU on pretty much a complete wipeout there. We're not looking for too much as regards to MU. And let's go look at UNH as well. Yeah, so we kind of got swept in the earnings play. Even though earnings overall was better than previous earnings, market analysts anticipated that it was going to be extremely higher than what it was. That's one thing about earnings. It's anyone's game, anyone's ball game. And the reality with earnings too is you can have a good earnings and the market still reject it because of analysts. So I think that's kind of crazy. You know, I think of earnings as, you know, you want the company to do better, but in this market environment, analysts' predictions and it hitting or not hitting those targets is what the market registers as success or failure. There's still an opportunity for it to at least get back, but that's going to be extremely difficult. If you take a look at United Health here, we had a buy bias set up as market absolutely threw this for a tailspin and then respected its very long-term support here. Multiple touches at this level, multiple touches. So it was showing signs that it was going to touch and reverse. Weekly 3 ATR put us in kind of a biased environment. It was in open waters as well, so we like that. Even though it's negative on the trend, the idea is 3 ATR back to the 8-period moving average. So complete rotation up here could be nice for decision making ability. Make a decision. Take a look at Cisco and NVIDIA. So we're watching Cisco here. Considerable buying on the push as of Friday. Yeah, we'll watch Cisco, and if it goes to the low, we'll let it go. Also take a look at NVIDIA. So NVIDIA, a little bit more bullish on the day. What we've kind of wanted to see. From a historical standpoint, this would be a very nice buy trigger for NVIDIA on like a 3-week, maybe a 3-week setup. You're in the moving average cloud. You have a cross above the previous week's high and above the 8-period moving average. Kind of peekabooed that. So we'd want to see a little bit more of a push out above the 8-period moving average on the weekly. And then that would still be a buy setup. The setup will be valid. We do have leap contracts on NVIDIA. So if you're looking to get in NVIDIA, the way it would work, you would take the buy, and you could, I guess, stop out at the low here. It's almost as an all or nothing play, so use your risk accordingly. But I would just use this play for 3 weeks. Come in here. You'd, if I was going to set this play up, you'd go to your options chain, and you say, okay, I'm going out 25 days, roughly. You look for 50-20. They're reasonably priced. You'd go to 50 being slightly out of the money, a 139 strike, and 20 delta. I'm looking at the delta, 50-20, so 50 delta and a 20 delta. Your 20 delta being 154. So I'd be buying the 139 calls in for protection, selling the 154 calls for protection. What would that be on a credit? Let's just kind of take a peek there. Yeah, run you about $461 for 3 weeks of NVIDIA. So not too bad, not too bad at all. Some more symbols were added to some of our scans there. Scans working. Very nice. Very, very nice. Yeah, we want to see this. It's definitely a buying opportunity to take a buy of NVIDIA for sure. So if you're watching, yeah, definitely take that opportunity for sure. Gonna go look at some SPY action there. See if SPY can pull through. Maybe we can get a golden cross here on the 10-minute chart. Nice golden cross setup, double golden cross here at open. Would have proved very, very nice for break to the upside. Almost very crisp, very clean. If we kind of look back at Friday, definitely a day trading opportunity for sure. Zoom this in a little bit. More cool. So very, very clean and defined setup. If you look at some of our breakdowns of the day trades for these, this setup is pretty straightforward. You see the golden crosses here. With the push to the high, you want to wait for a pullback. Something at VWAP or 2 standard deviations on the downside. This is kind of exactly what you're looking for anyway. Right, you notice you got this nice juicy hammer with increased with our setup right there, boom. That's a nice pullback. It kind of works the same way. You're looking for buying opportunities, and one of these buying opportunities is here. As it pushes up and it pulls back, you're looking to opportunity to buy the dip kind of at VWAP, and there it is. VWAP, buying opportunity, take the buy, stop out at the low kind of deal. And it pushes to the upside. Right now, having a little bit more of a negative bias. You have double red moving average clouds, right? And kind of tapping up here to VWAP. But I'm a little bit more bullish. I'm bullishly inclined here. Um, Kind of a wait and see on Monday. This is really a wait and see period. So we want to see if we can get above this 50% move on the Fed chairs candle, right? We want to see if we can get above that. There was significant setup here and almost in play here, right? Trigger here, but we want to be a little bit more cautious. It's playing peekaboo with our entry. So we want to see it actually get up and break above that 50%. That's kind of why we made it 50%, because you can see the rejection here is decently high. So we're being a little bit more cautious and a little bit more patient as regards to what we want to consider up or down on the market. Right, might be seeing a moving average cross green here on the Qs here pretty soon. Respecting VWAP. The first, if you guys know anything about the first 30 minutes of the market open, it will be the most volatile. So your setups, you're gonna have to have your setups very defined for your day trading. Our setups are when it respects VWAP or uptrends that kind of get down to 2 standard deviations, or buy candles in a reverse for 2 standard deviations on the positive side for the reverse of that. So if the trend is up, we're looking for negative standard deviation plays. If the trend is down, we're looking for positive standard deviation plays, with our setup to be respected, or plays at VWAP. You can see here what I'm kind of referencing. So you see IWM, um, kind of negative moving average clouds there on the 10 minute. You got the 10 minute setup here. So as it pushes into the moving average cloud, definitely a shorting opportunity. As you can see here, hammer shown right at VWAP and got rejected. So cross below the low, stop out of the high of right here, and it pushes to the downside at roughly 2 standard deviations. Uh, and also, you get a test of high here on the 2 standard deviations on the high side in negative territory. Definitely inclined to take shorts like that for a quick push to the downside. These kind of things just kind of have to be a little patient. But the Qs looking kind of the other way. So you have what appears to be, let me zoom in here. The 8 might cross the 21 period moving average. And if it does that, you can see a nice buying opportunity there. Okay. Kind of wait till all the chop kind of subsides. Really just barcode in here. Market hasn't really made up its mind, so we won't take any action. And that's really what being a trader is really mostly about. It's waiting for your conditions to be met, and then once those conditions are met, being able to take action and execute your plan. So having your plan already in place before that period comes is really important. Your hypothesis, your hippo is really really important. It's a lot of waiting and seeing here. So nothing crazy. Um, Again, SPY needs to go above 50% on that Fed candle. But if we start seeing a breakdown here where it gets below that 585 level, well, that's going to be a clear sign to that it's going to go to the downside in complete rotation. That's how I view it because and actually you also some of our previous videos we've talked about this head and shoulders could be developing here. So there's one shoulder, there's a head at 609.07, and then the second shoulder could develop at 648. So this level right here. So a lot of danger as it regards to the SPY. So we want to at least hit to get back up here before we become extremely bullish on the overall market. Yeah, very good. Okay, so should have some. Yeah, there we go. What else we got? Japanese yen. Take a look at Mr. Yen here. Yeah, the yen selling off compared to the dollar has been pretty extreme. So now's a good time to go to Japan, man. Me and Q have been talking about going to Japan, and then dollar to yen conversion is looking pretty good. So might make that a reality here at some point. Right. Clearly pretty straightforward here. You got negative negative moving average clouds on the weekly, and your setups there. Boom. Stop out the low. Don't necessarily does it one for one work for the forex market because you have two markets in flux, so you don't know which market has the emphasis for the setup candle. So it's a little different. We need to go ahead and take some of these, start taking some of these forex plays, and seeing if they actually work out the same way, like statistically and percentage wise. Pretty nasty drop for the UUP though. That is extremely significant. So dropping from all time highs there, or not all time highs, but the relative highs there. 3 ATR, looking pretty nasty on the drop there. It's insane. The gap is from 30.50, $30.50 roughly, down to $29.30. It's a lot for UP. So if you're bullish dollars, um, just dip. Kind of want to wait and see. Got XLF here. Kind of the same thing. Looking for that peekaboo play to really get broken, or at least double break before you kind of make a decision. Light sweet crude. I mean, if you guys are seeing what I'm seeing, it's pretty straightforward, right? You're looking at a very clear downtrend on the weeklies. It's been defined. There was actually an opportunity to take this play to the downside, even being a little aggressive. Crossing the 50% mark, you could have took that play to the downside for sure. Yeah, there was a couple opportunities. None that would have came up on our scanner, but definitely nice rips into the moving average cloud that definitely fall through to the downside. From a traditional standpoint, you could have took some of these plays as it broke below the 8 period moving average. As it went into the cloud, come back out, could have took that play. Maybe we can get a negative blowout candle here for NVT on the down here at the bottom. The moving average cloud is looking still looking positive and it's holding. On balance volume, could be poised to start going positive, but we want to see a setup candle down here that gets washed. That'd be very, very nice, ideally. You can see TLT, man, getting hammered as well. Right, blow out candles here. So if you're in TLT, watch out for this danger area at 87.26 for a possible reversal. You already see setup candles throwing a little bit Harambe patterns here at the low. So be mindful of that. Just watch out. Okay, bonds, man, bonds. Right, nice little bounce back there. That's why we have the possible reversal. And it did reverse. Boom, major. So maybe reversion to the mean trade in play here for TLT. All right, we talked about this one NVO in the Sunday recap video. If you're looking to be a buyer in NVO, this is a good as candle as any to kind of get a buy bias for most stocks, right? This is pretty insane, the gap there, and it's bridging that gap already, so could be a buy for NVO. Your actual strategic long-term buy or even an options play. If we go look at it, the option premiums are probably insane. So we'll take a look at that for like 25 days of NVO. For the 50, you've got about $2.80. So it's reasonably priced, not too bad. And then you compare that to if you wanted to do 50-20, probably make it cheaper. We'll set that up for you guys. Yeah. So it kind of puts it at 280. Oh, I only got one. That's why. Yeah, there's a vertical. So 185 for NVO. And you essentially would buy this like today and stop out at the low. Look for it to fill the gap or at least give it a reversion to the mean. It's way outside. It's way outside of its 3 standard deviation. But remember, what's low can go lower. The maximum you can lose on this option contract is what you paid for it. So can't lose any more than that. And that's the beautiful thing about options. Your risk is already defined. We'll actually leave that on in the order book. It's looking good. It's looking juicy. But we just want to kind of showcase what's all out there today. But really, we're in a wait and see kind of environment. Bond yields. We kind of already know what we want to do for this one. Talked about this one in the Sunday video. If it buys above this, right, looking to be a buyer. But as it stands right now, the market's not looking like it's ready to just erupt to the upside there. It's just more waiting and seeing. This XSP, right? The Russell, same deal. Yeah, man, the Fed really, with the Russell, with the IWI, right? It's a little bit more of a wait and see for that one. IWM, excuse me. Because of this resistance level here. So what you saw over here is just the futures for that, and the level is still, 1-for-1 pretty much. So as we get above, if we can get above this level, it'll be pretty good because you're in head and shoulders territory, but at least you have a fighting chance to push past that. And that's kind of what we want to see. Getting above this pivot and these pivot highs on the weekly. So yeah, kind of to our point, you got to set up. There was as it came up here in the moving average cloud, not really respecting, not really respecting at VWAP, but roughly close to it. You started seeing green candles print up here, and then immediately get washed to the downside. So going down to -2 standard deviations, you could tick that play, boom, stop out at the high, a little 2 for 1. There it is. Not too crazy. Yeah, so not looking too hot for the XLE here. You're seeing it's already in a downtrend on the weekly, and already breaking through this level. So expect more continuation to the downside on the XLE. Remember the XLE compared to the other sectors, comparing to the SPY, is definitely the laggard. So the XLE and the XLRE, they're definitely kind of scraping the bottom of the barrel there. The ones that are leading, XLC in comparison, XLC looking for strength there for any rally. XLF, if there's going to be any rally, you'll see it here first. XLF, and you also got some industrials, XLI strength there, and obviously XLK strength there. So you'll see the rallies happen there first, almost all three. That could also confirm to us a kind of a bullish bias, right? The XLK already bouncing well above the 50% mark. But remember, you have resistance here. So setting up for some pretty tight shoulder, head and shoulders pattern. Here's your shoulder, here's your head, and then tight shoulder, kind of close. Wouldn't look for it to be that pronounced as that close, but ideally you'd want to get above this 238.19 level on the XLC or excuse me, XLK. Sorry. Yep. But a lot of very good uptrend, nice buying pressure there. We ideally, right, we would want to see it kind of push above that level before we can say definitively, yep, this is the first of the three between the XLK, the XLC, and the XLF that that we would be like, okay, we're good on the overall market. The card start taking buys in the SPY, start taking buys in the Qs. A little bit of a wait and see game. Yeah. So yeah, things are looking just in the immediate term, not looking too positive. Negative plays were definitely in play for day trades. Not really looking to be a day trader today. Just wanting to see our weekly setups, but I mean they're clearly here. So you've got negative moving average clouds as you get buys into the positive territory here, and then you get washed at VWAP. You can take that down to 2 standard deviations as it rejects. Especially on hammer candles like this, get rejected. It's pretty clear. SPY wasn't that defined though. A little bit more choppy. SPY and the Qs, a little bit more choppy. So you can see here that there could be a setup potentially in the moving average going positive. So I'd be a little bit more hesitant to take that play on the Qs because it's showing relative strength. That's what we got there for that. Let's go look at some of our Ethereum ETF as well as Bitcoin ETF. We'll take a look at that. So you've got some Ethereum ETF in play here. We'll go ahead and mark this as good to go if it crosses above that zone there. We are in a weekly uptrend. Unbalanced volume is green, so not looking too bad. This is a little bit more volatile, so I feel a little bit more comfortable stretching your legs at close to 3 ATR on the weekly. Right, has no problem staying up there, extending way past it. So historically, it could potentially be a good look. So we got PG mark below. Let's go look at PG there. Procter and Gamble. Right. Relatively is a new downtrend. So Procter and Gamble, a little bit of a different look here. You got to set up a candle and it breaks to the downside. Not a good look for Procter and Gamble, right? We just wanted to see, well, is there potential fall through if it breaks below that mark there? And it did. Alert came in kind of late, surprisingly a little late. So it should have been in 2 or 4 minutes ago, right? It just immediately came about 30 seconds ago. So it's very interesting. But yeah, Procter and Gamble break of the low there, and really a lot of continuation to the downside, and it's thrusting to the downside. So, all right, possibly a test here, and then a capitulation down to start its thrust to complete rotation. Go look at Mr. Bitcoin there. Different story for Mr. Bitcoin. A lot of strength here in Bitcoin. When you think about recently touching that 100,000 psychologically $100,000 level, getting up there briefly and kind of pulling back. So I believe Bitcoin could see a potential rotation set up here for Bitcoin. If it bounces there and it shows signs of being bullish, you could look to add here. That's pretty good. Ideally, you'd want to see it drop a little lower for the ETF and around the 65.3 mark. So I like for it to come down and really pick me up. Deep pullbacks like NVO before I just get a buy bias. Things need to completely capitulate for you to say, yeah, I'm willing to accept risk if it at these wider risk profiles. Because your reward profile is pretty pronounced, right? If it goes down here, cool. But if it goes up here, it's almost 2-to-1. If it goes back to the 21, that's almost like 5-to-1, right? 4 or 5-to-1. So your risk to reward profile looks a lot better from a historical sense. If it's reversion to the mean being 21 period moving average, or early signs of trouble, the 8. You can see pushed away. If you reversion to the mean, to the 8 is pretty appropriate, right? So if you're getting this here, the 8 is up here, and by the time you reach, it's about halfway. So that's kind of how I think about it. If I take this buy here, I could look to see maybe profits at this level. Because remember, this is moving while this is moving in time. Getting a little bit of bounce in the VIX. So fear in the market is necessarily not decreasing. There was a substantial pullback from the highs there at the 28 on the VIX. So not seeing early indications that the market is just elated to go to the upside. It's being dragged, kicking and screaming by the Qs. You can actually go to our flex grid, take a look at that. Let's go take a look at our XLK. Boom. Look at our XLK. We could see things still looking green. Relative weakness in Adobe and QCOM. We'll expand those, and then some weakness in ACM. So this right here is a pretty good snapshot of how the overall sector is doing. We love to use these on the weekly. Yeah, you're seeing, like, yeah, it's definitely not looking too good for QCOM. Very clear defined downtrend in our weekly setup. We have double moving average clouds, but we really only use one. Yeah, also AMD, double red there. So that's all she wrote there. Um, would want to see it get substantially away from the moving average cloud before you take the buy at support levels. So like this, with a reversion to the mean trade, ideally. So this is kind of what we were hunting for AMD, a substantial push away from the moving average clouds for a potential buy with the setup, of course, and risk management. We also have, what's the other one that we saw? There's a video. CRM, Apple, very strong. Whew, AVGO looking pretty good. Holding up decent at this rotational zone at highs. It's got a lot of work before we could look to kind of step back in there. Wouldn't mind seeing a pullback. Remember, we took the play down here. Pretty massive. So double green, moving average cloud there. And then, buy here, roll, and then pull back for the close. So shout out to AVGO, one of my favorites. Are we going? Oh, going this way. Sorry. Microsoft. We actually haven't tapped into Microsoft here, so let's go take a look at Microsoft really quick. This is one of those that you definitely need to have in your portfolio in some capacity, whether it be in the Qs, the XOK, or buy it out. Right. You need to be, if you don't have the Qs or XOK, Microsoft ain't going anywhere. They make great products. They're within the Mag 7. So Microsoft, love to see a little setup here. Got some rotational action going right here between the 442 level and the 404 level. So nice $40 swings there. A little test here and rejection of that 442 level. So we could get some rotation back into the 404 level. What I would do back then, that's why we have the alert there. If it gets down there, looking to be a buyer of a rotational option in Microsoft, with obviously a stop out if it breaks, certain setup levels there, right? But ideally, loving to see Apple or Microsoft, to the upside here. Scroll through. Oh, reverse again. Sorry. And that's Oracle. Look at that. Double green moving average cloud. Nice pullback though. Looking for a setup there. ACN, same deal. Yeah, it's a good way to, I call it using someone else's homework. These ETFs have been curated by professionals that have way more time and they do this more consistently. So if you're looking for like a watch list, what you could do is on all of the like a smaller watch list for some of you new traders, you could go to ETFDB and type in your sectored ETFs, XOK, XOC, XOB, XLI, XLRE, right? And then just take the top 3 holdings and take those top 3 holdings and put them in a watch list, right? In this case, I take all the top 10 holdings and put them in a watch list. But if you want to know who's who, Microsoft, Apple, Nvidia, right? Pretty much who's who there. You also get AVGO if you do the top 4, so on and so forth. It's just what you want to include in your analysis. If you look at the XLF, see how we're looking there. Goldman Sachs is the laggard there. So we can go take a look at Goldman. Yeah, Goldman's struggling. CGS here. Love it. So gaps here, right? See that? Halfway fill in the gap. Pretty standard stuff. You guys know anything about gap theory? Simple play. Simple is better, right? Some people look at the volume and be like, oh, if he has this much volume, he needs to at least go down and smudge in the gap, right? Don't have to look necessarily at that. It's good to know. But for shorthand, summary expectations for a gap, look for it to halfway fill or all the way fill, right? Halfway fill gaps or all the way fill gaps. See, the gap started here, goes up. If it starts breaking below here, the danger area, the initial danger area, is halfway in the gap. And you can see here, went down there, peekabooed, and then it started to pull back up a little bit. So you're not out of the woods yet, but essentially halfway or all the way, right? Very simple. Keep it simple, please. Oh, SPGI. Let's take a look at that. Right. Relatively new weekly downtrend. Right. So new downtrend there. And setup candle here. So new downtrend, relatively new setup candle. Ideally, we want more of a rip, right? So let me go to XLV. So with these downtrends, right, it's not enough for you get a new downtrend. We want more of a rip on the downtrend, right? We want this to be defined down, right, new downtrend, and then get a substantial push to the upside with some setups here, and then a capitulation of that for nice follow through. That's what I'm saying when I say we want a little bit more. If we go back to or SPGI, sorry. If we go back here, right, new downtrend, yes, but it's essentially at the lows of the previous week. So if it opens, right, we'd want to see more the setup to be more pushing upwards, even a little bit, give us a little move into the moving average cloud, like we got with XLV, right? Almost pushing into the moving average cloud and then rejecting out of it, sort of for a nice follow through. I think Johnson and Johnson was like that as well. Yeah, a little bit of push and then push and pull. So Johnson and Johnson went negative, pushed away for the negative, but a nice juicy pullback up, and then he started getting those candles washed for very nice follow through. So you'll see a lot of times we'll pass on other pretty straightforward setups. We want all of our edges to confluence. So yes, shorting the rip is in play, and you might see that in some other stocks that might go negative on the weekly trend. But we want all of our confluences to show up so that we can get pretty consistent results. This, if you look at Johnson and Johnson, is pretty consistent to what we get in the XLV. Really nice follow through, a sustained follow through, right? And we want that repeatable. We want that repeatable result constantly. AVGO, kind of same thing. If you're getting a new, if you're getting an opportunity to take the buy, this pullback into the wave is pretty significant. So you're riding this wave here for price action, and a pullback on the trough end of the wave is extremely valuable to us, especially if you start getting candles that get washed and you start being able to take buys and adds as it starts pushing out. So you're getting more immediate results. That's kind of what we're looking for. So we want repeatable expectations, and the way you get that is seeing kind of similar looks. Yeah, so don't want to make this video too long. We've been in the market at roughly almost going on an hour and not seeing too much. So we'll just have to wait and see, guys. We'll have to wait and see. Not showing a lot of strength here. Not showing a lot of strength here as regards to the market breaking above that Fed level. So look out for some more weakness. Our levels are still pretty consistent there. If we can get that SPY above the 50% weak mark for the not look like it's going to happen today. Have to see some massive rallying for it to do that, but we're looking for a little bit more. We're looking for a little bit more to the upside. Might see some rotational bounce here at 586 for the SPY. Kind of the same thing for the Qs. There might be an opportunity for a bounce at its level, right at the 515. It's already kind of showing signs that it's doing that, but definitely need for it to get above that 50% weak mark, 50% mark on the Fed shares. Massive candle for us to say we're out of the woods yet. The market has to push above that. So thank you guys for your time, and appreciate you guys' expertise in wanting to learn trading. Okay, this is a skill. It is something that needs to be honed. Not necessarily the technicals. The technicals are easy actually to develop, but the skill set comes in your ability to be patient, be disciplined, and to follow your plan and stick to it. Right. So you can get repeatable results like this Q trade that we see here. Buy here with our nice setup, nice pullback, and then 1, 2, 3, 4, 5 rolls on that 5-week rally, right? So we want repeatable results like that. To do that, we have to follow our system and just wait for it. How long do you have to wait before you get a setup candle between that, right? If you're in this and it's in a rally and it has a pullback multiple days, wait for the setup. Cross above the high, take your buy, stop out at the low. If it goes down to your low, you have to be disciplined enough to take on that playoff and know that the market will give you another opportunity. Not really be worried about the one play that got stopped out, right? And then the multiple weeks of follow through, multiple weeks of rally, even possible add-on positions here, and here. We kind of took that one, but we're already leveraged in the Q. So this was just icing on the cake, really, I'm telling you. So good look there. But thanks, guys. This is your boy, MC Fire. You guys have a wonderful, blessed Monday. And goodbye.